Hopefully that stays on now. So we have two different types of taxes, so we have two different tax rates. The hardest part probably is figuring what our tax base is. What is the amount that is going to be subject to tax? But once we have that tax base, we can multiply it by our appropriate tax rate and figure out what our tax is. So, like I said, relatively simple equation that we're dealing with. So we have to figure out, though, who is covered to determine what our tax base is. Like, who's that going to apply to? Whose tax base are we talking about here? And what type of income is covered under that tax base? They're all different types of income, right? We have wages, which is what we're concerned with here. There's interest income, there's dividend income, there's capital gain income, there's all sorts of different types. There's inherited income. There's all different types of income. So what this tax base is determining whose income are we talking about? What type of income is it that we're going to be applying that tax rate to? So that's what and under that, what type of income is what types of services are they providing? What we're talking about here is essentially earned income, okay? Earned income as opposed to passive income. So earned. So what does that mean? It means it's income that we have exchanged our time, our services, our expertise, our talents, our products for that income. We've done something. Through our efforts, we have earned that income. As opposed to unearned income, which would be things where our money is earning its own income. Interest income, you deposit money in the bank then pays you for the use of that money. You're not doing anything. Your money is the one that's earning that income. There's no effort toward earning that. That's unearned income. The taxes that we're talking about in this chapter only apply to earned income. Now, it could be income earned from wages. It could also be income earned from self-employment. So now we are going to talk a little bit about those self-employment, what applies to self-employed individuals. We're going to talk about it kind of as an aside, because as an employer, because they're not employees, we really don't have to worry about how they pay those taxes. Okay, and I'll go into more detail on that. But just to kind of give you an idea of what the type of income is we're talking about, it's earned income. So you've exchanged, like I said, one of those times, your services, your time, your products, your efforts for that income. So, and again, that flows into determining what our tax base is in that equation. Then we need to also talk about the types of compensation that are defined as wages. So there are all different types of compensation. We talked about a lot of them in the last chapter. When we were talking about the FLSA, we talked about bonuses and commissions and different ways of paying people. Now we also have to define what types of compensation are we including in this tax base. There are certain types of compensation that are excluded from that. They may be considered earned income and they may be considered wages, but they're excluded. They're not taxable for Social Security and Medicare tax purposes. So we're kind of funneling down. We start with this big tax base of all different types of income, and then we narrow it down to, okay, now we're just talking about earned income. And then we're going to narrow it down further, and we're going to pick out that type of earned income that isn't included, isn't subject to Social Security and Medicare tax, to kind of get down to what that tax base is. Then we're going to talk about our rates. All right, so now we're going over to this part of the equation. What are our tax rates for these different types of taxes? And you'll see, so we've got some acronyms. We have a lot of acronyms in this chapter. So you're going to get familiar with those acronyms. So we'll do some calculations on using our tax rates multiplied by, once we've determined what our wage base is, for both FICA and SECA purposes. I'm not going to explain that right now. I'll explain it in a few minutes, what those stand for. Then, once we've done that, so we've calculated what our tax liability is and we've withheld it from our employees' paychecks, now we've got to then remit that money, and we have to remit it based on a particular schedule. So we're going to talk about the requirements and procedures for depositing. When they say depositing here, they mean remitting. They mean paying. So we're not depositing it into our account. We've already done that, essentially, when we withheld it. We're talking about depositing it with the IRS and sending it to the IRS. The taxes that we're talking about in this chapter, the Social Security and Medicare taxes, they have the same deposit schedule as income taxes. So when we get to chapter 4, we're going to talk about this same equation, but different tax rates and sometimes different tax bases as well, but we're going to do it with regard to income tax payments. The amount that we're withholding for income tax purposes, we're going to send that to the IRS at the same time that we send those amounts that we've withheld for Social Security and Medicare taxes as well. So we're going to talk about what the schedule is for sending those in. And then, as I told you, we have a deposit schedule, but we also have a reporting schedule. And we're going to look at what's called the Form 941, which is the form that is used by businesses to report their Social Security and Medicare taxes and income taxes that were withheld during a period of time. The reporting schedule that we have is different from the deposit schedule in most cases. Very rarely they're the same schedule, but usually this is a more frequent schedule. The deposit schedule is much more frequent. Think about it. It's the IRS. They want their money as soon as they can get it, right? They do want their report, but they want their money faster. So there are two different schedules that we have to concern ourselves with regard to depositing with the IRS and with regard to reporting to the IRS. So that's what we're going to talk about in this chapter. Any questions before we move on? Need a drink. All right. So let's see where we are here.